Good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. Here where we marry charts, so the technical analysis component, with looking at options and trying to forecast a little bit about price movement and expected price movement in the underlyings that we want to take a look at today. You know, one thing that I've always gotten a lot of questions about is hey, how useful or accurate are those price targets that come out from the different investment houses? And I thought, well, you know what? We have a lot of tools and applications that can really kind of put that to the test. So let's give some context here. Today we saw some, new price targets that came out, some stocks. So I thought I'd bring them to life to you and see what we can dig up here. So let's jump into Tech Talk here. First of all, I want to take a look at Caterpillar. Now, Caterpillar is ticker symbol CAT. The target was raised from $89 to $78 at JP Morgan, and they have a neutral rating on that. What does that mean? Well, they think that the stock is going to go higher. Well, guess what, folks? If you take a look at Caterpillar today, it's trading at $94.36. So they moved their price target from 78 to 89, and the stock is already trading $5 higher than their target. So does that mean that they think that the stock is actually going to pull down? Well, I don't know. But what I do know is that the stock right now is down 78 cents today. And the options right now, if you take a look at the weekly options or the next 2 weeks that are expiring not this Friday, but the next Friday, they're pricing in the potential for this stock to go up or down $2.10. Okay, great. So now you have even better context. You're actually talking about the here and now and a forecast going forward that seems a little bit more feasible based on where the actual underlying is trading. Now, of course, they have a lot of models and fundamental and components that go into this, but so do option prices. They have all of those components that are in there, and one of the key components is implied volatility of that forecast, and that's what I'm leveraging when I give you that estimated move. So for the next 10 days or 11 days, you can expect a range of between basically 96 and some change or down to 92 and some change. That's the range right now that the options market is pricing into. Some other critical levels, the moving averages. I look at the 20, the 50, and the 200-day. And the two that I really focus on are the 20 and the 50-day. Why? Because the 20-day gives me a feel for trend, and the 50-day gives me a feel for what institutions could be potentially thinking about at this point in time. The 20-day comes in at 93.30. So we have the stock is above the current 20-day at 94 and some change. So I have a market now that's trending above what I consider its trending moving average. And since the price is above, I consider that bullish. The 50-day moving average comes in at 88.70. That's that institutional level. As a matter of fact, if you see that there's a test of that 88 level and it holds, you're probably going to see that institutions are going to come in at some point in time, especially if it's still in between the 20 and the 50. The 20 is above the 50. That's a nice little sweet spot to watch to see if actual institutions come in and buy on a pullback. The 200-day moving average, which is just long-term support or resistance, comes in at 79.90, so I know where long-term support is. Now, some of you might ask, well, okay, but how useful is this target that they put out there? Well, let me give you some context. The probability that between now and January of 2018, just taking what we know now with the price action, taking a look at the January 90 level, the $90 level, that's what the options I looked at, there's a 56% probability that the underlying Caterpillar will be under $89 at January expiration of 2018. The probability that it's expiring above $89 by January of 2018 is 44%. Okay? So you basically have a 44% probability with what we know today and what we could potentially forecast going into the future of the stock being above $89 over the next year. If you do buy the stock at these levels, the one thing you do know is with the price target that JPM just gave you, and with the probabilities, you know that you're going to have to do something, whether it's getting some dividends, which Caterpillar does pay, so you have to that'll offset some of their purchase price, and you're going to have to do an exercise like writing calls against this particular holding, again, reducing your cost basis. That's why we do this, folks. All right, is to give you this context, other than just giving you this arbitrary target price that's actually a target price that's below where the stock's trading. All right, now let's take a look at a couple other ones to just really reconfirm and build on this whole exercise and study. So Illinois Tool Works, ticker symbol ITW. Currently, Stifel comes out and raises their target to 135 from 123. Well, the stock's trading at 125.70. It's up 45 cents today, or 0.4% or 56 cents. Now, if you take a look at the weekly options for this $125 stock, they're pricing in the potential for it to move either up or down over the next 2 weeks, right? So I'm looking at the options that are expiring in 2 weeks of this stock to move either up or down $4.35. That means it could be either at 121 or it could be at 129. That's what they're pricing in for the potential movement. Now looking at the 20-day moving average, 123.90. So the stock's above the 20-day moving average. It's trending to the upside. It's bullish. The 50-day moving average comes in at 119. So you can see that the institutions who are in this stock or who have been looking at this stock are happy with the trend. It may look, if it goes below that 123 level and maybe potentially challenging the 150, holds firm, they may add to their positions to that level. The 200-day comes in at 110. So now I'm giving you some context here. Now let's really give some context. What's the probability of it actually being in a year above or below their price target of 135? Well, right now there's a 66% probability that by January of 2018, this stock will be below 135. That means, and also there's a 34% probability that it will be above 135 at expiration in July of 2018. That does give you some upside, $10. But it also tells you that basically there's only a 68% probability that it's even going to touch that level. And so when you look at that, you're going, well, all right, I need to make sure that I'm getting enough dividend payment. I'm writing some sort of premium against this so that I'm reducing my cost basis, because otherwise $10 on a $125 stock, while it's a nice return, it's a low probability that it's even going to get to that level by January of expiration. Could it get there beforehand? Of course it could. Could you take profits there? Of course you can. But again, I like to look at the laws of probabilities because then that gives me some perspective. It also forces me to think about my active management of this position. The next one I want to look at is Flowerserve Corp, ticker symbol FLS. Now, Stifel came out and raised their guidance, their target from $50 to $55. Stock's trading at $48.89. All right, so now the stock is below their original target, which was $50. They raised it to $55. Now, I have no context of why they raised it or what models they use. I just know what they put out there in the press. Now, the stock's down about 1% today, and the options that are expiring in 2 weeks are pricing in the potential for this $48 stock to move either up or down $3, $3.13 to be specific. So that means that you could see it at either 45 and change, or you could see it at 51 and some change between now and December expiration for these options that I looked at, which are in 2 weeks. Now, the 20-day moving average comes in at 46.09. So the stock is well above. It's trending. It's bullish on the short term. So that means the trend is up. Right, the institutional 50-day moving average comes in at 45.20. That's the level that I watch to see challenge. And if there is going to be nervousness about the continuation of that trend and to see if institutions might start unloading stock, that's where you could get into an area where there could be some volatility. And more importantly, there could be a change of investment thesis. In other words, it could go from bullish to bearish. Also, the 200-day moving average is above the 50-day and the 20-day moving average. So there are a lot of people that are in this stock from higher prices than where it's currently trading today if you look at the 200-day moving average. Now, it did challenge its 50-day moving average on 11/29, and it looks like if you go back and look at the chart, institutions came in, it was right on earnings, they bought it up because it held there, and then it bounced, and that's where we see it today, right now trading at 48 and some change. So the longest dated options that they have for this particular stock, they expire in July. That's still enough time. You're talking about basically 8 months of pricing activity. The probability of it expiring below their price target of 55 is 73%. The probability of expiring above their price target between now and July of 2018, in other words, being above $55, is 27%. So you know, folks, that there's a low probability between now and July that the stock is actually going to be trading above that level at expiration of those options. Now, is that law? No. There are so many things that can change, but having this context really gives you a thesis that's a lot stronger than just taking these arbitrary targets and saying, yeah, I trust it. They could do a good job. They could have a great track record, but this gives you that transparency. Finally, the last stock I want to take a look at is Herc Holdings, ticker symbol HRI. Now, this is a smaller, about 300,000 shares traded type stock, but I wanted to take a look at it because it was a small entity that was giving you some guidance. It initiated with a buy at Northcoast with a target of $48. Now, the stock is trading at $41.72. That's the reason why I wanted to look at this one. There seems to be a decent amount of edge in here. In other words, roughly around almost $9, where and the stock is up about $1.84 or 4.6% already today. Now, what are the options telling you? Well, right now, the options that are expiring in a couple weeks are telling me that the stock could move either up or down $3.35. Okay? Now, the 20-day moving average is at 38.20. The 50-day moving average is at 34. This is telling me that this stock right now trading at 41 and some change is in a bullish trend, and institutions are already in this particular stock. Obviously not in earnest because of its low volume, but there is interest. We'll see if that interest grows, especially now that more analysts are starting to look at it. But again, what is the probability, taking a look at the January 2018 long-term options, what we call the leaps, of it expiring above or below that price target? The probability of expiring below the price target of $48 is 72%, or roughly right around there, yep. And then the probability of it expiring above the $48 at January expiration is 27%. So again, why am I giving this pieces of information to you? Context. It tells you that either there will be a decent dividend stream, that your thesis is that the market's going to go up, and that's why I talk about the moving averages. That gives you some context there. I do the options pricing to give you some context of potential thresholds to the upside and to the downside. And then finally, just looking at a probability analysis that goes out 1 year. Now, of course, this is all fungible. In other words, it will change when the prices, the underlying change. These forecasts will change when days past expiration. These will change with interest rate changes and so forth. So you know that these aren't hard and set, but it gives you context. All right, that's it for Tech Talk today, and I hope this gives you great transparency into how we use charts and option pricing to make some sense of these target prices that just came out from all of these various houses. Till then, join us at 4:30 Eastern Time, where we will be doing the closing bell. That's 4:30 Eastern Time, the closing bell. We'll wrap up today's action, and we'll get you all set up so that you can get ready for tomorrow's action. All right, folks, we'll see you at 4:30 Eastern Time. Take care.